What's up, folks? Give everyone here another minute to join. Thomas.
Hey, Jesse, what's up?
All
Good
good.
morning.
All right, yeah, we are live on X and on YouTube. Happy Monday, everyone. Got a head of content here, Tom Montero, along with me. How's it going, Tom? Good morning.
Hey, Jess, good morning. How's it going?
All right, man.
All good for me. I'm not long on silver, so I'm happy.
Exactly. Yeah, it's a good morning for those who are short the metals. Less of a good morning for those who are long gold and silver. Let's jump right into it. We got a packed half hour here. We're about 90 minutes before the opening bell, and let's check the tape real quick. Futures are down. We were much lower though during the Asian and European session overnight. A bounce perhaps is brewing. We'll keep an eye on that. We're seeing just a continuation of the price action from Friday. So we saw right here around 1 a.m. Eastern time was the overnight bottom, below 68.50 on the S&P 500. We're back above 6,900 right now. So we'll keep an eye on the bounce, which might happen, might not happen. Over in the commodities, that's where all the focus is right now. Just wild volatility. Silver futures, guys, when it opened, we were down by as much as 11% on the spot price. I think we hit a low of 71. Spot prices right now are down about 3.6%. So we are recovering a bit in silver. Same with the spot gold prices, which were down by as much as 5% overnight. So recovering a bit of those losses. Tom, what's your outlook for the metals today? What is going on?
Yeah. So a lot going on. First of all, I'm getting a lot of echo, Jesse. By the way, can you just turn down the volume? Thank you.
Yep.
Appreciate it. All right, great. So basically, I think, the question here and the lesson here is that, this is a short-term movement. This is triggered by market mechanics. And after all, the main and the long-term perspective for metals, to me, remains bullish. I mean, you don't know when that's going to happen. We don't know whether, metals are going to rebound in 6 months, 1 year. But truth be told is that all the fundamental factors still there. And that doesn't really change the long-term plan. And obviously, we've seen this play out, in a very, very pronounced way on Friday. Basically, I think everyone knows what happened. The backdrop was obviously the new nomination of the Fed chair, Kevin Warsh, which again, and I think this is really interesting. Kevin Warsh is in theory a hawk, but he was actually nominated by Trump to cut rates. So there's a little bit of disconnection here, and you would think that would be bullish for metals, because we don't understand what the Fed policy would be. But I think what really happened here is that we just saw the market react swiftly to mainly within the repricing of the U.S. dollar, but then traders started getting margin calls, and then the market mechanics was something that unwinded very, very quickly. CME tried to change the rules mid-game, which only made things worse. And then when we saw it was a tremendous crash, which affected traders everywhere. I mean, if we look in China, traders in China got margin calls, were halted, and they only were able to get back to their position, 30% later. So this was really historic, and I would be surprised if we didn't see changes in the actual market mechanics after this event. I think a lot is going to change. I think first of all, it's important for us to understand, that this is not a fundamental change in the risk premia and the price correlation. I think it all stands, but definitely market mechanics. We saw a real crash, and that's usually when crashes happen. Half of the time, and it's because of market mechanics rather than fundamentals.
Yeah, I mean, I tend to agree. In general, I think the reaction we're seeing is, a bit, exaggerated here, because it's not like Warsh is going to come in and start raising interest rates immediately. We're acting as if he's going to take over for the Fed from the next meeting and announce the end of quantitative easing and interest rate hikes and so forth. So I do think that the metals, specifically gold and silver, they ran up. The rally was so aggressive, so fast, that I think that we were just looking for an excuse to kind of move lower. I think in general, metals, gold, silver could perhaps retest these levels that we saw from last week. In general, a lot of the bullish factors supporting gold, it's still there. The central bank buying, currency debasement, and so forth. So we'll keep an eye on the metals market. I have the dollar chart pulled up here as well. I think just last week we saw from Trump, he was kind of talking about endorsing a lower U.S. dollar. It didn't mind, if the dollar was acting like a yo-yo, I think is what he said. And then, of course, the dollar kind of took a tumble, only, to reverse a couple days later with Trump's decision to appoint Kevin Warsh. I think there's two main questions right now on everybody's mind on Wall Street. And I'm eager, Tom, to get your take on this. First of all, what was Donald Trump thinking, appointing Kevin Warsh? First of all, there was, of course, Rick Reeder from BlackRock, who was a front runner up until, a couple of days before the decision. And number two, how soon before Donald Trump decides to fire Warsh or potentially backtrack on this decision?
Yeah, for sure. Jesse, can you mute while I'm talking, because I'm getting a lot of echo, and I see some users are getting as well.
Sure thing.
Yeah. All right. Okay. Cool. So yeah, now it's perfect. Okay. Thanks. So basically, first thing, I think this was a decision that came with a lot of interference from the market, and I think this is one of the reasons why it was interpreted as a risk-off movement. Most of all, mainly because the market saw it as okay, so Trump could have appointed someone who's completely aligned with his position. He could have appointed someone that would be anti-market, anti-central bank independence, and that really wasn't the case, right? I think it's Warsh has a career, has a deep understanding of market fundamentals, of economics, all those things that are really important that people are looking into. So I think this is a professional choice, and that on a first level, that made the market happy for sure. Then secondly, I think the way this played out was really interesting, because then the market interpreted it as something, but then the opposite happened. Basically we started getting margin calls everywhere, and people were leveraged out of their positions just because of the way we were betting on the continuity of risk in such a high level, right? And so this is first of all, I think more than anything, it's an interesting perspective, because it kind of changes. It's not as linear as saying Trump chose someone who's aligned with him, and this is how the market reacted. I think the market, I think there are so many nuances going on here, but I think most of all. Please.
I just, I mean, you definitely can't say that Trump appointed a puppet with Warsh.
Exactly. But then again, obviously we know that Warsh has, tremendous personal affairs with Trump. They have a good personal relationship. They know
I
each
think
other.
there might be a family relationship even. I think the father-in-law of his wife, there might be a little.
Yeah, exactly. So Trump loves to do, politics with personal relationships. I mean, he likes the overlap between those two things. That's how he does business. That's how he does politics, right? And I think Warsh kind of fits into that bucket. Obviously he does have the relationship, but then again, on the other hand, Warsh is someone who has a career, who has an understanding, someone who's actually a hawk, someone. It's not someone who's coming, to be a Trump puppet and cut rates tomorrow, like say what happened in Turkey. So it's not exactly the Turkey playbook that we're seeing play out here, which I think is one of the reasons why the market was giving such a high value to gold in the short term. And then again, we're talking about short term, right? Because when we talk about long term, it seems obvious that obviously precious metals are the way to go. Regardless of whether Warsh turns out to be a Trump puppet or he turns out to be someone independent and does what he thinks he should do based on actual data and economics. Regardless of what happens, I think the gold's path upward remains because of base and fundamental reasons that are much more important in a macroeconomic and social level, if you will. I mean, obviously there's a lot of wars going on, deglobalization, supply chains, nearshoring, so things that are obviously bullish to not just gold but commodities in general.
Absolutely. I think this is a good opportunity also to showcase the analyzed chart feature on Investing.com. Instead of drawing, several and numerous technical indicators that could take you up until 30 minutes to 45 minutes. Let's just have the AI work its magic here for us in just
Exactly.
1 to 2 minutes.
Is this?
I think.
Is this the moment to buy
that,
gold? I think that's the main question, right? When we're talking about short term, right? I mean, my perspective is that, and obviously what we do mainly as analysts is understand, the risks and probability of returns on the long run, right? We don't know the short term. And I think this is my question for it. Like, so should we buy it in the short term? Is this the time to buy the bounce or later on? Because I'm buying. That's for sure.
I mean, yeah, you look at the chart and it definitely looks like, a bullish hammer candle here, at the overnight low around 71.40. Prices recovering, bouncing hard ever since then. There was some strong support here around 72.85. So yeah, I mean, right now, if I were to go, ask me silver, long or short, I think I'm on the long side. We have the technical analysis.
Jesse, I think you broke up. Oh, you're back. You're back. Yeah, you're back.
Let's take a look real quick here. Essentially, we have here entry levels and stop losses as well as price targets, both for bears and the bulls. And even if you're an aggressive bear or a conservative bear, right now is you probably want to see prices go a little bit higher before you dabble into the market if you're on the short side. So it does look like right now the takeaway is trading silver is with the wild swings, which you got to take, of course, into consideration. Right now it looks like we do have some very interesting trading opportunities both in silver and in gold. Oversold conditions definitely show that this could be a time to get back in there. We do have a chart here at the end as well. Take a look at that. So yeah, I mean, you do see a little V-shaped recovery here, very recent after such a violent sell-off. So we'll see where silver and gold head during today's session. Tom, I also want to head over to the cryptocurrencies where, Bitcoin and Ethereum are kind of, taking it on the chin, if you will. Really over the weekend, we saw Bitcoin fall to a low of, I think it was like $73,000. We are back above 77 at the moment, but sentiment still very shaky. Ethereum is down 3%. All the other cryptocurrencies are down. Some are double digits here, Solana and Dogecoin. So very interesting to see where the crypto market goes. I think a lot of the talk for cryptos was that, Bitcoin was a digital gold. So the question is, why hasn't Bitcoin been rallying along with the metals?
Yeah, exactly. And I think above everything, I mean, what we've seen play out was that, Bitcoin traders, they got everything that they wanted from a fundamental level, Trump backed, crypto, all those things, regulation, all those things came into the equation and they were positive for crypto, but still we didn't see crypto, follow the same path, even as the stock market. I mean, obviously, we've seen the stock market much closer to a record high than Bitcoin and gold, even after, that massive drop. Obviously, silver is another animal, but I think, we really did not see that adoption of Bitcoin as a risk off asset as of yet. I think it remains very much on a risk on side. And what we're seeing play out right now is basically, people are getting margin calls across the spectrum. I mean, obviously, a lot of people were leveraged in silver. A lot of big traders were leveraged in silver. I mean, obviously, the movements that we saw preceding the crash that happened on Friday were also just as historic as the crash itself. I mean, so this isn't just it's not just a crash that's a one-off. I think it's the whole price movement for silver over the last 5 or 6 months. It's completely a one-off in history. And obviously when we saw that, when we saw all those speculators, when we saw all those leverage traders getting those margin calls, they're going to get those capitals from elsewhere. They'll have to resort, they'll have to close positions elsewhere because they're getting margin calls everywhere. And I think, it's interesting to see that. And I think this speaks more, and what I think is the most interesting thing, I think this speaks more about a change in the perspective of gold itself than on the perspective of Bitcoin. I think Bitcoin didn't actually become the risk-off asset that we thought it would become, but actually gold became a risk-on asset, for a while. So I think it's more like gold and Bitcoin. It kind of became more similar, but on the other side of the equation, they both became risk assets at the same time. And obviously, we're seeing that trade unwind a little bit. I think we're going to see things normalizing. Gold to me continues the ultimate risk off asset, but those smaller market mechanics, which are extremely risk on, leveraged ETFs, all those things that are supporting the market, hopefully they're going to be, get a better regulatory framework, and we're not going to see that happening again. Because at the end of the day, and this is something that I saw, it's been reported that actually JP Morgan closed a short on silver, with about a 26% gain. So basically they nailed the trade perfectly. And why does that happen? Because we're talking about a market that doesn't have the same liquidity as the gold market, right? And it's a lot easier for, someone like JP Morgan to come and, liquidate all the positions and some more, start that cascade once you get, once you get, a fundamental factor to back it, and then close the position again and, get huge profit. So I think, there's a lot of, thin liquidity sort of manipulation that's possible when you get a market that's as leveraged as silver is. And I think a lot of what we saw was that. And I think, about gold, there's a risk off factor, but there's a lot of, that same cascade, coming from silver and all the other precious metals coming to gold as well, getting to gold eventually. So, again, it's a lot about market mechanics more than the fundamental factors. And I wouldn't say the same about silver, because silver, remains, it's obviously for the long term it's a good asset, but remains a bit overvalued, I would say, in terms of, the dynamics now. But definitely gold to me is the ultimate asset. If you're thinking about gold as a risk off asset, then I think gold still holds a lot of value. But these other assets, certainly they're tricky. And we're, once you get those mechanics, once you get those margin calls, it's, the cascade just starts trickling down, and it's where it gets complicated.
Absolutely. And yeah, speaking of margin calls, Bitmine Immersion, Tom Lee, one of the big market bulls, one of the biggest bulls on the street. Shares right now are down 10% in the pre-market, and that is because the company, which owns about 20,000 Ethereum, it sits on a large amount of Ethereum. Right now, it's sitting on $6 billion in unrealized losses. If Tom Lee were to sell today, that would break the record for the biggest unrealized loss in history. So, right now, perhaps a crypto company which might be or might be going, insolvent.
Yeah.
The way it is right now, Tom Lee needs Ethereum at $7,000 just to exit at break even. We're at 2,300 right now. So keep an eye on this name during today's session. Another name which you want to focus on, connected to the crypto space, Michael Saylor and his big bet on Bitcoin. It did briefly fall under the company's average cost of $76,000. So, that was the first time since October 2023. So after all of Saylor's, Bitcoin purchases, the company is barely at break even. They were underwater over the weekend, and we see shares down about 8% in the pre-market. So yeah, that's another name. Just awful chart. Take a look at this one.
Yeah.
Make or break level right here. And, right now it looks like it's breaking down in the pre-market. They do report earnings on Thursday. So it'll be interesting to see if Saylor announces any more losses or impairments on the Bitcoin holdings. So, that's another potential black swan for the market. These crypto-related companies, which...
I mean, we saw SVP, right? That wasn't so long ago. I mean, it happens fast, and when it happens, it's a cascade. I mean, it's these people, they're not doing the same type of balance sheet reckoning that you must do when you have a company. I mean, you don't have the same hard assets, you don't have the same, assets of higher quality. So if you have everything in Bitcoin and very volatile assets, it's easy to get broken just by volatility itself. And I think this is what's happening here. I mean, we saw SVP, and we're seeing this in these companies. I mean, I'm not saying that that's what's going to happen, but when you have a leveraged market, and when you have, people getting margin calls, and when you have this type of risk environment, it's very fast. It's very fast. And this is potentially, the second risk. And I agree with you, Jesse. Very good point from bringing this over.
So yeah, keep an eye on this one. Just the chart here peaked at about 160 back in June, and it's been ugly ever since. So taking a look at the pre-market right now, let's take a look at some of the pre-market movers. The mega cap tech stocks right now are trending lower. Tesla, Nvidia, Meta, Microsoft, Google, and Apple are down in the pre-market. Very interesting. Oracle is up 5%. We did get some overnight headlines that the company plans to raise $50 billion in capital in 2026 in order to fund their AI endeavors. That is a big risk for the market. Oracle spending plans, if you want to take a look at the chart, prices down over 50% from last year's all-time high. So Oracle right now, big name, especially for that AI trade. What you want to do, going forward, there is a lot of volatility. There are two key earnings reports as well from the two Magnificent Seven names. Google on Wednesday, followed by Amazon on Thursday. So those two reports will be big market movers. In addition, we also get results from two more AI-linked stocks. Today, we get results from Palantir, after the closing bell. Shares which last year were some of the best performing, one of the best performing stocks in the S&P 500. They are breaking down in recent sessions. And again, that has to do a lot with the worry regarding the AI trade. We did get results from Disney earlier in the pre-market, and those were positive. Shares are up in the pre-market. Tom, any specific names you're looking at today?
No, I think it's interesting to talk about a little bit about the AI trade going into earnings, because we're seeing something really interesting here, and I think it's a continuation of what we saw last quarter, which is basically a lot of those results have been driven so far in the AI cycle or revolution, if you will. Were driven by basically companies increasing capex and spending, one company spending on the other company. So basically the creation of a circular economy within the AI space. And I think we're seeing traders pick up on that, basically. So everyone who's making profits only on the circular AI economy is getting whacked. And then, those companies were able to show, different types of monetization in terms of AI. We're monetized. So for instance, Meta did had a really good report. Why? Well, because they managed to monetize ads in a way, that it was we didn't see in the past quarter, in the previous quarter. And then we're, able to bring some, other sources of revenues within, the AI space. So I think this is what the market is looking right now, and it speaks a lot about the continuity of, the AI revolution, the AI structure. I think it's going to be a lot about, which companies are able to develop native AI offerings, which companies are able to, develop their own space, have, different types of offerings that are not necessarily tied to, database, data center creation, on the back of huge NVIDIA, chips buying, which is obviously a trade that we already priced in. So I think, a lot is going to be about this. And what we're going to see is a lot of earlier stage companies being acquired and being, entering that trade, so that, we have, a longer term and a bigger growth in the long term. Because what we're seeing is kind of the peak growth of this first phase. I mean, and that doesn't mean that, the AI story by itself is peaking. But I think is that, the same companies and the same phase and everything that we kind of priced in is sort of peaking. And we want to see which companies are able to take it to the next level, which is show that, they have, earlier stage AI offerings that, display a higher growth potential in the long run. So I think, Palantir is a complicated company right now because of that. I think, Oracle is a company that exactly, showed the, just not just the ability, but the willingness to do that. And, so it's different from what we saw last quarter. So I think the market is more tilting towards that direction. And I think as an investor, what I'm trying to distinguish here is, which companies are actually bringing, new ways of monetizing AI, which companies are looking 1 year later down the road, which companies are bringing scalable AI offerings and are building, even if they're spending a lot of money, are they spending on scalable AI offerings, earlier stage AI offerings in which they'll get the returns later on? Or are they just buying, those same products that are getting more and more expensive and becoming more reliant on those really expensive offerings that are getting whacked by the AI inflation? And I think there are lots of names out there.
Yeah, I think we saw it was pretty evident last week with Microsoft and Meta. At the end of the day, the street wants to see evidence that the spending is actually translating into sales, into revenue. So very interesting. The Google report this week, in my opinion, is the biggest one, and the spending plans, the CapEx spending plans, of course, will be in focus. Just want to showcase the Palantir potential trading scenarios as you were speaking. I pulled this up here. Bearish to the if you're bearish on Palantir, the downside momentum is evident as we see here in the chart. So you want to enter at around 165 with a 175 stop loss, targeting 146 and then 136. Vice versa, if you're bullish and you think that earnings today kind of reset sentiment on the stock, then your entries are at around 158 with upside targets near 170 and above. So very interesting to see how that name behaves today post earnings.
And what I was going to say, Jesse, if you can pull up the screen again, just for 1 second. What I was going to say is that we have a convergence of signals here. If you look at the fair value, is if I'm not mistaken, is 40% lower, if I'm not mistaken. So that's basically the risk assessment here.
Right. It does assign conviction levels. That's right, conviction levels and confidence levels. Makes it very easy. Almost feels like cheating. It does all the hard work for you. Finds trades that you wouldn't see otherwise.
And what I think is cool. And what I think is super interesting about the offerings that, basically differently from, what we used to have like 2 years ago, we do have an offering that's holistic in terms of, from when you get into the website, you have discoveries, you have the fair value, you have, pro picks, you have so many offerings for understanding which companies, are presenting a risk or, a good risk or a bad risk. And then you have, how to do, your own due diligence, understand, all the different, investor grade models for understanding the stock levels, how expensive, how cheap it is. And then you have finally how to buy this stock, how to enter this trade, which is the chart analysis. So what I would look here and the way I usually go about this is, I try to see convergence. If I see, a stock that has, good fair value, it's a technical buy zone, it's within one of our other models, and then you see all the convergence. That's what really makes, gives me confidence. And I think Palantir is like the exact opposite right now, just looking at the charts. Obviously, nothing's certain in life, but, I would say that, risk for the chart analysis is lower. Fair value, shows 40% downside potential.
I will pull this up. That's right. According to the fair value models,
44.
Palantir still significantly overvalued despite it being down 20 or around 30% in the past 3 months. So according to the models, still significantly overvalued. We'll see how the results play out tonight. We are getting some headlines crossing the wires, Tom. Here, get this. SpaceX is in advanced talks to merge with XAI, which would potentially create the biggest IPO in history. I think Elon Musk is targeting June. So, the bevy of news keeps coming out, very exciting on this one. Everybody wants a piece of the SpaceX IPO, perhaps the biggest event of the year potentially. So keep an eye on that one. We'll see how the day goes. I think we are running out of time.
Yeah. I mean, if you want to stay for a couple more minutes, I'm okay. I can stay.
Definitely. Always a pleasure. Right. Yeah. I think just there's a lot going on right now.
Yeah,
like
sure.
I mentioned, with recent headlines coming out.
Yeah. So I think so I think Elon Musk he wants to consolidate it because I think at the end of the day, Tesla cannot trade as a car company anymore, and it's pretty clear from a business level. Not just from a stock market perspective. I think when you look at from the actual business side, it's simply not scalable enough. It's the competition is high. Obviously EVs, they weren't as life-changing as we thought they would be. So much going on in terms of the fundamentals here. So I think what Elon is trying to do is actually consolidate his empire, which is going to help Tesla itself because it's part of it. So the way I see things is sort of Tesla becomes a car robot company, which draws on the AI offerings and sort of helps build SpaceX and everything, and it's sort of one big conglomerate, which is all tied into Tesla stock eventually. Again, and this might be one of the reasons why Elon was looking at that 7 trillion pay package, because he would get 1 trillion if Tesla hit 7 trillion.
I mean, just imagine the valuation. Like this would very easily become the world's biggest company within very short amount of time. When you consider everything under the same
exactly.
roof.
So how would Tesla get to 7 trillion ever? I mean, so that's a path forward. That's a path.
This is one way. Exactly.
This is one way. I mean, probably the only way. And so I think this is what he's trying to do. I mean, eventually, I wouldn't, be surprised to see, eventually SpaceX, IPOing and then being acquired by Tesla, becoming just all one single stock. And then we're talking about a $4 or $5 trillion company, which only has to, go up, 50% for Elon to hit his pay, compensation bonus. And then, the game changes. So it's exciting times. And I think this is an interesting strategy in terms of, getting all the different sides of the market and making, the snowball effect.
Definitely. That's a good way of putting it. Also, crossing the wires just now, it seems as if the U.S. and Iran are heading towards negotiations. We did see, of course, oil prices move up on fears that a U.S. attack is imminent at the end of last week. And, right now we're kind of seeing that trade unwind with crude oil down 5%. And that is hitting some of the energy stocks from pre-market as well. So, it looks like, dodge the bullet on that front, at least for now. Very, we'll see, of course, where the developments go, because there's a never boring day in the political world that is the Middle East.
Especially. I think, I think the Venezuela situation, gave the U.S. a lot of leverage to negotiate with Iran and, with everyone in the Middle East, because it sort of de-risked the region in terms of supply chains. Obviously, U.S. companies weren't really willing to, to make the necessary investment to get the profits off of, Venezuelan oil, which is, very hard oil to get, off of the ground. And then there's, all the challenges in all stages of the process, from downstreaming, midstreaming, upstreaming, it's everything. It's completely outdated. So I don't see U.S. companies, taking that risk, from a business side. But I think, the Venezuela situation, what it did do is, politically, it gave the U.S. a lot of leverage to negotiate in the Middle East. And I think this is, one sort of continuation of that. It's the U.S. has the upper hand now to negotiate with Iran and say, do what we want you to do, or no problem. I don't care if you close the Suez Channel, the canal. I don't care anymore. We have other options, and we're not relying on you. We have a very easy market on oil. We have options. We have supply chains that are near short. So I think this is what it did, and I think this is a continuation of that, in my view, at least in some instances.
Yeah, definitely. The rules definitely changed after Venezuela, after the capture of Maduro. So that's the way Donald Trump likes to operate at times. Unpredictable, but hey, he does seem to get the work done, at least in some cases. Some other cases, the verdict is still out. But hey, we'll see how the session progresses. I think we're about to wrap it up. Taking a look at futures, we're still lower, but again, off the overnight lows on the session. So we'll see, of course, if the Kevin Warsh sell-off continues, or will stocks reverse heading into some of the big earnings reports into the week ahead. So Tom, thanks.
Yeah, thank you.
Thanks for joining me today.
Thank you. I was just going to wrap it up with an interesting statistic. That whenever a new Fed chair takes the seat, and basically this is just the average. It doesn't mean that it happens 100% of the time, but basically on average, when you have a new Fed chair in the first 6 months, you have the market correcting by 15%. And apparently, the market likes to test new Fed chairs and to see how they respond. We'll see if that's the case. But again, it's usually markets don't like risks. There
is still uncertainty. Even though we did get news of the nomination, there's the question of the timing. When will Warsh be nominated, and what happens with Fed Chair Powell? Does he stay on board? Does he just resign and decide he's no longer?
And where does Warsh stand?
There still are some risks here.
Yeah, and we don't know where War stands. I mean, at the end of the day, we don't know. I mean, he could be he could be hawkish as he was, his entire lifetime, or he could just, play Trump's playbook. We really don't know
Yeah, I
this
think
time. I mean, this is
it was
really
a good,
up.
it was a good analysis I read over the week. They dubbed him a hawkish dove. A hawkish dove. So we'll
now.
see, how that plays out during his potential tenure
So
as Fed
you're
chair.
saying he's hawkish for rates and so dovish for rates and hawkish for the Fed's balance sheet. Is that what
there was some viral tweets over the weekend on X, which showed I think a couple of speaking clips from the past, where essentially Kevin Warsh argued against an inflated balance sheet and talked about the pros of trimming it down. So that could have spooked some of the investors right now on the street. But again, thinking, long term, like we mentioned earlier, it's not as if Warsh is going to come in there and start raising interest rates by 100 basis points, next month. So it does look right now, I woke up in the morning, I took a look at the futures, and it almost looked like Liberation Day again. So it does, it is a bit, things are kind of stabilizing right now, kind of, potential bounce brewing. I don't know if we closed green today, but it would be telling for the market if that were to happen. Again, very interesting day ahead.
Very interesting
Absolutely.
Key day for understanding, how the market is looking at risks and, market mechanics and de-risking apart. This is, today we start seeing how the market is actually pricing in, those changes. And it's going to be very interesting for sure.
Cool. And I think just one last point, because it is the first trading session of the new month, and new Pro Picks stock list just dropped.
Exactly.
So, go ahead, check that out. There were several winners last month, some even up by double digits. So
we had one 147% up last month, by the way, SanDisk. It was picked at the beginning of January, and it closed up 147%, pardon me, which is
as soon
amazing.
As you said 147%, as soon as you mentioned the percentage gain, the only ticker to pop up, in my head was SanDisk. So a lot of people are asking where the money is going to. It's going into SanDisk. It's going into Micron. It's going into Western Digital. Those are, perhaps the new safe havens, at least in, this market environment. It's all about memory and storage.
A cool taser about, the new list. I'll tell you, SanDisk is out of the list. It's not for the list of AI picked stocks in February, by the way. So just
you heard that here first. You heard that here first. All you guys on X and on YouTube right now. You heard that here first. I mean, taking a look at the chart, the AI perhaps does know what it's talking about. Very, very bearish candle right here on Friday. We were up by as much as 20%, and we did end the session up just 7%. So we'll see if the rally is running out of legs, and if, according to the AI Pro Picks, SanDisk is out. Go ahead, check the new list, see what winners are waiting for you right there. I think that's it for today, Tom. Like I said, thanks for joining. May the trading gods be with you. Good luck, everyone, and be on the lookout for perhaps a new video coming out tomorrow, a live stream before AMD earnings. Have a good one, everybody. Have a good week.
Have a good one, everyone. Thank you, Jesse.
Later, Tom.